Just in market terms, it's been striking that NVIDIA shares, they've been mostly sideways since the middle of last year, obviously after being up thousands of percent and having these massive moves higher in profitability. But is the market kind of questioning whether the value of NVIDIA's head start in terms of the processing units is sustainable? How do you view that?
Yeah, it is interesting that it kind of has been going sideways the last few months. I think we're just waiting for the next big trigger, either down or up. I frankly hope it's up. And I think this is not investment advice, but given the level of activity, $500 billion with NVIDIA as a key partner in that endeavor speaks a lot. I think, at this point, NVIDIA is more supply constrained than being able to, and is unable to actually serve all their customers at this point. When that will end, I don't know. But I personally am very bullish on the prospects of NVIDIA and all the other new entrants in this space, because, we should not all give up and think that NVIDIA is going to take over the world. There's, in a growing market, in trillions of dollars being invested, huge opportunity for new entrants. You mentioned I'm on the board of D-Matrix. That is a company that's creating much more energy efficient, high performant inference accelerator for AI. There will be opportunities for a company like that to find their customer base.
Yeah, the pie certainly seems to be growing fast enough for everybody to get some.
In light of that, Meta did say, Zuckerberg actually today said that Meta's going to spend up to $65 billion on AI this year. That's a 50% increase over last year. So these CapEx numbers we do get from these hyperscalers next week, how much are they going to matter to this AI ecosystem at a time where, look no further than Stargate earlier this week, investors are back in that AI trade and certainly going to be wondering what continues to fuel NVIDIA from here?
Well, you bring up a great point, Morgan. So Mark Zuckerberg came out, said 60 to 65 billion. What did NVIDIA stock do today? It got hit. So it tells you that investors are thinking beyond this to other things like DeepSeek. And did they, in fact, trade a model for $6 million? And so if you're cutting your training cost by 1/10 because you're doing things with the algorithm that really help cut down on those training costs, then do you need to spend $100 billion for Stargate or $500 billion ultimately? Can you cut back on that? And then does the value really start to show up at the agent level, where software sitting on top of these massive hardware models? That's where the value accrues. Like if we can get on and say, book me a hotel in San Francisco for $500 between these days and get me an air flight, and an agent does that all for you and it does it well, then that changes where the value is going to start to accrue, because ultimately I think you end up with the hardware layer getting commoditized and the value accruing to the software layer or agents or however you want to think about it. And I think the hardware training costs continue to drop. And so what you see outperform is going to drastically change. And as you know, I've been saying for a while that we're going to run into an AI digestion phase sometime by the middle of the year. And I think the DeepSeek stuff that came out on Christmas Day actually probably adds to the potential of that happening.
Yeah, the group feeling this week's rally as investors bet on continued AI spending this year. Meta hitting a new high today after announcing a plan to spend $60 billion to grow that business. Let's get to Julia Borson with more on that company's CapEx plans. Julia.
Well, it's Meta CEO Mark Zuckerberg pre-announcing its AI roadmap and spending plan for the year, saying Meta will invest between $60 and $65 billion in CapEx this year to drive growth of their AI offerings. Now, that 60 to 65 number is up from the 38 to 40 billion in CapEx last year and far ahead of the spending in the low $50 billion range that analysts expected. Zuckerberg saying he expects Meta AI to serve more than 1 billion people this year, up from the 500 million users that Meta AI had at the end of the third quarter. Zuckerberg also announcing they're building a 2-gigawatt data center and developing an AI engineer tool. Now, one place they're going to be deploying some new AI tools is the addition of advertising in Threads. Head of Instagram, Adam Mosseri, announcing that Meta will start testing ads in Threads, giving brands AI-powered controls as well as filters. Now, with this news, Meta saying Threads has 300 million monthly actives, and 3 out of every 4 people on the platform follows at least one business. That's seen as a good indication of potential for brands. Now, to put that 300 million number in context, startup Blue Sky reportedly has 29 million users. So I'm sure we'll hear more from Mark Zuckerberg on AI, how it's going to impact all the different parts of their business, as well as some more details on Threads monetization when Meta reports earnings. That's coming up Wednesday afternoon. Melissa?
All right, Julia, thank you. Julia Boorstin. So is tech spending like this enough to keep the market rally going? Because that has always been sort of the key test. Will these giants continue to spend on AI? Will it continue to rally big cap tech? We're going to find out a lot next week. So is this a good indication that the tech spend the race is still on?
I think so. I mean, I feel that this first month of the year has felt a lot like the first month of last year, except for you remove political overhang and you actually have the rest of the world trying to be more like America. At least Becca's talked to us about Davos because it's fascinating, I think, the impact that Trump's having on the rest of the world. But yeah, I think so. And if you think about Meta, they were the first one really a year ago to get out there and talk about it. It was probably about 18 months ago, but they started to talk about the CapEx plans. And they were in the year of efficiency. It was a question of, well, suddenly the stock that was rewarded for cutting back on CapEx in the metaverse going to be rewarded. And they absolutely have been. And in fact, they've outperformed the Mag 7 aggressively so far this year. So I like this story. I like the message this week from both the White House and policymakers is we're not even sure who's going to fund this. We've got a few people that have stepped forward to be shepherds of this process, but it was a week where AI and the prospect of spending and again the broadening of that trade. So I think it's very good for infrastructure. I think it's very good for some of the chip players that build the infrastructure. And I think this is a very important announcement. And I think kudos to Meta for getting out there first because I think other folks want to do it as well.
It almost felt like Larry Ellison was up there with SoftBank and announcing Stargate, and Mark Zuckerberg was like, you know what, I'm in it too. $100 billion, here I am. And so this comes, there's a series of announcements here, a cadence at this point. So if there are any doubts about the AI spend and whether or not that would power the rally, I don't know. Has that been put to bed in your view?
I think it's been put to bed. It's always short term. It's always looked through that lens of maybe a month out, maybe 2 months out. But the good news about CapEx is that it's deflationary. So you have more productivity, you have more efficiency, so it actually brings down inflation. So if we can get CapEx going where we think it's going, inflation should come down as well.
I hear what you're saying. I think there's a time element. I agree with you that if AI and everything related to it can increase productivity, I think that's where you're going.
And efficiencies.
Right. It's
right?
Gonna,
so that
inherently is deflationary.
Yeah.
But in the short term, we're building infrastructure. We're building data centers. We don't have enough workers. We don't have enough materials. I see that as being inflationary. So reflationary, right? Good for growth and pushing up inflation. So
I'll put a button on this. And so if you can increase growth,
we're not going to just fight it out all night.
No,
oh, okay.
no, because we're both.
He's like, I'm going to have the last word, and then we're going to keep moving on.
Yes,
is what I heard.
yes. So if you can increase growth by 3 to 4%, you could actually bring inflation down ultimately by a percentage point as well. So if you can increase growth to where we need to be with all the CapEx spending, you could get a percentage point out and actually reduce that percentage point in growth that you got to the upside and inflation to the downside. So ultimately, I think inflation it will be deflationary, but I understand your reinflationary worries.
Yeah, I think it's just timing. And if we're trying to get interest rates down, because Trump declared that will happen, and inflation down.
He knows a lot about interest rates, apparently.
I don't think that's going to. I don't think it's going to happen in the short term.
Right.
More than the guy in charge, I think is technically what he said. But
yeah. Right.
Well.
Anyway, back to Meta.
Yeah. Yes. Well, I'm with you, Rebecca, in terms of order of operations, and I do think that is important, right? It's important in math. I think it's important in economics, and for us to kind of keep in mind how this whole situation functions. Along that same line of thought, I do think that the posturing has kind of shifted to. Are these hyperscalers getting too far over their skis in terms of CapEx spend to now I think there's FOMO in terms of are my competitors going to actually outpace me, outproduce me, outscale me, and reach those efficiencies that Steve was talking about before I do, creating more of a moat for them and a competitive disadvantage for me.
So at what point is that a bad thing for the big cap tech trade? Not for a long, long time.
I don't think so. And particularly not for the chip makers. I know you're going to ask me about NVIDIA. I mean, I think, the concerns that we've had, the stock popped about 7% and then has been kind of trading off a little bit. But I think it kind of reinvigorates that trade, that perhaps some of the concerns about sales growth going forward perhaps are a bit overdone in the short term, at least.
For a name like Meta, we will be able to see those efficiencies, right? We see that
They were the first one?
Exactly, to actually outline, this is what we spend, this is what we get back. For a lot of other companies, we have yet to hear that. So, in terms of your point about there is a time element to it, to the investment and then what follows.
Right.
Are we going to hang on to this trade during that period?
I mean, I guess the question is, what else looks attractive and has a catalyst for growth, right? So these companies are, I think most would argue, richly priced, if not outright expensive, and everyone owns them, so that makes them risky to the downside. But if you put your money somewhere else, where else are you going? And we can talk about overseas and is this finally the moment, or small cap, but it feels like a lot of people want to keep a good leg on this stool.
Yeah.
That makes sense. Because long term, it still seems like the right play.
Yeah, I think Stargate might have bolstered the emphasis on what Meta said today. I think if anyone's earned the right to get out there and say it's Meta, and if you think about the ability that they had first over anyone other than NVIDIA to say, hey, we see a benefit here. And again, if anything, the pushback on the CapEx spend has not necessarily been around the hyperscalers. It's been around what's the competing factors with some of the biggest players, the hyperscalers, with NVIDIA to develop their own chips. But again, in the short term, I don't even think that's an issue for NVIDIA. I think this is all great for NVIDIA, by the way. It was a week when semiconductors, they had a tough day today, but if you look at the semiconductors trade, semiconductors are doing what they did last year. They're up over 11% year to date. The dynamic around those that are really involved in the infrastructure build out, and it's been Broadcom all over again. But I think this bodes very well for next week. And remember, Meta's out on the 29th, and they will tell you a lot more about this and the profitability.
So then, therefore, this should bode well for the markets overall.
Yeah, I think the markets are reliant on mega cap tech and Mag 7. So whichever way they go, ultimately the market goes. But to your question, Google has a path for the spend. Amazon has a path for the spend. Apple has a path for the spend. There's only those tertiary names that don't. So you can make a case that they're just fostering, if the market is reliant to the tune of 40%, 30 to 40%, resting on the back of the workhorses, which are mega cap tech, this is good news for the market. This is good news for the tech sector.
So which of the big cap tech companies is your favorite at this point?
I still think it's NVIDIA, particularly after this news. And I think they're squarely, I know they've been knocked down to, a third now? But I think that they still are the engine that is leading to this growth. I will, admit that, yes, you worry about the hardware. I do think they've integrated themselves such that there's really, a programmatic build out around that. But at least for the time being, I do think NVIDIA, to me, has the most upside.
Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.